Hello traders, and welcome to Hit the Mark Trading's daily US dollar index review. My name is Martin Rives. Today's date is Tuesday, December 3rd, 2013. I'd like to ask you to please check out hitthemarktrading.com, get a little bit of information about me and what we accomplish, especially if you're interested in simplifying your trading. You really need to consider the boot camp recordings. It's 6 hours of everything that I cannot put together in a single 5 or 6 minute video. Okay? Now, when you're there at the website, go to the contacts page and you'll be able to sign up for Rooster Call. What the heck is that? Well, Rooster Call is my morning email note I send to clients. Remember, we've prepared ourselves the night before with our homework. So all I do with a Rooster Call is I say, okay, well, I've read the wires, I'm looking at the charts, and if it impacts our position or a trade we're thinking of entering, then I mention it. Or maybe I'm looking at the market that looks really good for day trading, okay? Then I mention it. I send it to clients, and I'd like to send it to you for free. Now remember, everything I mention in this recording is for your educational purposes only. Good. Let's get to the charts. US dollar index. Well, my goodness, I was excited yesterday, wasn't I? I saw this break, and furthermore, in the early Asian trading, we were higher than yesterday's close. And what happened was price pulled back. Now we have a protective stop. We were not taken out. We were not taken out. Let me show you this. Protective stop is at 80.45. And let's see, we had a low of 80.51. So we're not taken out. That doesn't mean we won't be. But what just tells you is that we are basically sideways, non-directional, and the people who trade these currencies are afraid to buy, afraid to sell. And these are some very highly paid individuals, right? And they're not doing anything. They're non-directional. They're scared. So I thought, hey, we broke this. We're going to go. And we were also rejecting our moving average. So, you know, it would be nice if everything was 100%, but unfortunately life is not that way. A big warning was this moving average with this low reading here. That was a big warning, so it was an aggressive trade. However, risk is known, completely known. Okay, so now let's take a look at the daily chart. I'm sorry, the weekly chart. All right. So if you can see this, I'll make it. The weekly's really trying to pull this down, having a difficult time. Very strong trend to the downside. Now let me just look at the indicator. If this indicator breaks that red line, guess what? We're moving higher. Okay, but it's not all that easy. It looks like we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, about 20 something days, which is an eternity for trading, of nothing. Nothing. Oh, sure, we went up a little bit, but then nothing. Afraid to buy, afraid to sell. So, in hindsight, our entry was a little bit premature. Okay? No problem. We know where our risk is. Let's take a look at the intraday chart. Okay. Intraday, well, I'm going to have to move this line over here. Remember, I talked about this last night. So this line certainly was in play today. Price got very close. Okay. So as we look at tomorrow, okay, remember I'm using a 10 range bar chart, So what I did was I made an adjustment so that I could see where the floor pivots are going to be for tomorrow. Now this is the main floor pivot right here. So the safest bet in the world is to say, well, we're going to move to the main floor pivot, and if we continue higher, we're going to go to this R1, and that means if we go lower, we expect to go down here. Okay, so if we hit this, it looks like we're probably going to be taken out of our trade. This whole thing is just non-directional, so it's hard for me to get excited and say anything definitive. So let me show you how we can determine when a swing trade is going to emerge. Okay, for that, the monthly shows when we break 84.84, by golly, we're going to 90. Now there's no question. We break 79.500 to the downside, we're going to 76. So those are two swing trades we can hold and wait for. Alternatively, anytime we hit 79.500, gosh, for over a year, 2 years, we move higher, and that's what's happened recently. I thought we were going to go move on up yesterday. When we hit 84.84, we expect most likely price is just going to fall. Now you got to understand, a lot of highly paid analysts and economists are talking about the U.S. dollar way back over here. U.S. dollar is just going to keep going up. Okay. In the big picture, the chart is your newspaper, and until the technicals show us any reason, we're locked in a sideways range. End of story. Let's go to the weekly real quick, and then I'll let you go. Okay. If we drop down, we're looking for 79.500. There it is again. Okay. If we move higher, we're going to run up here to this 81.88 area and hopefully move on up. That's it for tonight. I'll talk to you tomorrow. Thank you.